Hello my dear viewers, you all are connected with International Accounting Course Unit and this is your third lesson, that is foreign currency transaction and hedging foreign currency exchange risk. My dear viewers, in this lesson there are two special guests joined with me to explain today's lessons to you. Let's introduce them. This is Miss Zara and this is Mr. Bean. Say hi. Hello friends. In this video, we are going to discuss about what is currency, what is foreign exchange rate and the type of foreign exchange rate, direct cost, indirect cost, and in the final, we are going to see some examples. Let's move to the lessons. Dear friends, first we will look on what is currency. Simply we can say currency is a medium of exchange for goods and services. Think about the period 2000 years back. There was no coins, no notes, no credit card, no cryptocurrencies. You may ask what the people did to exchange the goods and services. The answer is they follow the barter system. Okay? Some people, they may have excess anger on their hands. And the other people, they may have curry powder, excess curry powder on their hands. And they exchange the goods among them. So that is called as barter system. But the failure of barter system. The failure of barter system allowed the people to find out the money. So after the people, they find out notes and coins. That is accepted by the world and this is known as the currency. So the people use this money as the medium of exchange. Okay? But after some times, the world experienced globalization. As the results of globalization, the country like Sri Lanka, they like to move beyond their borders in order to purchase goods and services. For example, Sri Lanka started to purchase some goods from UK or else some goods from China, India likewise. So from these, the foreign exchange activities has been started. Let's see what is foreign exchange. In order to understand the foreign exchange, we have to understand what is transaction. Foreign currency transaction in the sense it requires the receipt or payment in foreign currencies. Therefore, in order to make the foreign currency transaction, countries need to transfer their money into another country's currency. This is called as foreign currency exchange. Now, Sarah and the Bee going to explain what is foreign currency exchange. Let's assume the Bee, he is living in Sri Lanka and he is a wholesaler of fruits. And the Miss Sarah, he is a farmer in US. Just assume both of them are contributing with a business transaction. Hello Sarah, I am Mr. B. I need some apples to buy. Do you have?
Hello B. I'm Sarah. Yes, I have apples. How many apples do you want?
Dear Sarah, I need 1,000 apples. But before that, I need to know how much each one.
Hello B. I'm charging $1 each apples. So you have to pay $1,000 for all apples you are buying.
No Sarah, I don't have any US dollar. Could you please say the price in Sri Lankan rupees?
No Mr. Bean, I'm charging the prices in US dollar. So I'm not accepting other currencies. You have to pay the $1,000 US. I'm sorry for that.
Oh. I need apples, but I don't have US dollar. What can I do? Please viewers, help me. Dear viewers, Mr. Bean is crying. Oh wow. You have to help him. Please give your advice how he can do. Dear viewers, Mr. Bean needs some US dollar in order to buy the apples. So please, we just advise him how he can do. Before that, let's have a bite of apple. So what Mr. Bean need to do is go to the bank, and there are two options. He can buy the US dollars from the bank, or else he can advise to the bank to settle the US dollar to Sarah. Assume Mr. Bean is going to buy the dollars from the bank. How much he need to pay to the bank? That is based on foreign exchange rate. Simply we can say the foreign exchange rate in the sense the price of another currency. Now let's assume the Mr. Bean has 100 Sri Lankan rupees on his hand, and he think he can buy 100 euros using these 100 Sri Lankan rupees. Dear viewers, let's say, can he buy 100 euros for 100 Sri Lankan rupees? The answer is absolutely no. The 100 Sri Lankan rupees is not equal to 100 euros. The reason is the foreign exchange rate is decided by foreign currency market, which means it's decided by demand and supply of foreign currency. Therefore, the rate of the foreign currency is fluctuating continuously. So, this changing foreign exchange rate is known as floating rate. So next, we will talk about types of foreign exchange rates. So there are different mechanisms used to determine the foreign currency exchange rate. The first one is independent floating rate, which means the currency rate is determined by the demand and supply of currency market. Second one is fixed rate. Fixed rate in the sense some currency fix their currency rate based on the other country currencies. The final one is European monetary system. Within the European Union, they just introduced euro as a common currency to all the members, and based on that euro, all the countries, they just exchange their goods and services. Next, we will talk about direct cost and indirect cost of foreign exchange rate. The direct cost in the sense, how many domestic currency does it take to buy the foreign currency? It means telling the value of foreign currency in terms of domestic currency. For example, if you take Sri Lanka as a domestic country and US is a foreign country, Sri Lankan currency, which means the LKR is the domestic currency and the US dollar is the foreign currency. So here the direct cost in the sense telling the value of US dollar in terms of domestic currency. It means the Sri Lankan rupees. Let's see the example. So here the 1 USD is equal to 185.15 Sri Lankan rupees. So this is a direct cost. Second one is we will talk about the indirect cost. The indirect cost in the sense how many foreign currency does it take to buy from the domestic currency. So let's take the same example. In this example, the USD is the foreign currency and the LKR is the domestic currency. So here we can say the value of 1 Sri Lankan rupees in terms of USD. Let's see the example. Here the meaning is 1 LKR is equal to USD 0.0054. So based on that, we can explain the value of Sri Lankan rupees in terms of USD. So this is the indirect cost. Let's see one example with Sarah and the Mr. Bean. Mr. Bean imports 1,000 apples from US. Therefore, he needs 1,000 USD dollars in order to make the payment to Sarah. So, Mr. B might ask his bank to sell 1,000 USD to him. Here, Mr. B is buying currency while the bank is selling it to Mr. B. If the bank selling rate is 185 Sri Lankan rupees for 1 US dollar, let's see how much Mr. B need to pay to bank. So here here Mr. Bean need to pay 185,000 LKR to the bank in order to get 1000 USD. Let's see the second example. Miss Sarah, she exports 1000 apples to Mr. Bean and she has got LKR 185,000 from the Mr. Bean. Now Sarah need to exchange the currency into USD. Therefore, she need to advise her bank to buy the 185,000 LKR. Assume the bank buys these currencies at LKR 184 per dollar. Let's see how many dollars Sarah will get. In this example, 1 USD is equal to 184 LKR. However, this is the indirect quotation. The reason is, in the Sarah's point of view, the domestic currency is USD and the foreign currency is LKR. But here, the domestic currency value represents in terms of foreign currency value. Therefore, this is an indirect quotation. So let's see how many US dollars will get by Sarah. So, if Sarah exchange 185,000 Sri Lankan rupees into the US dollar, she will get nearly $1,005 from the bank. So here, since it's indirect quotation, we have to divide the total Sri Lankan rupees by the exchange rate. So based on these indirect quotation, we can calculate how much Sarah will receive. So this is a simple example that shows how to calculate the amount that we receive or pay when we make some foreign currency transaction based on the foreign exchange rate. So now, hope you all have a clear idea about what is exchange rate and what is direct and indirect quotation. I hope Sarah and Mr. Bean explained well to you. Not only that, we have to study about the foreign exchange risk and how to catch those foreign exchange risks. And finally, we will study how to perform derivative accounts. Hope you all love the lessons. And if you like my videos, please share it with your friends and subscribe my channel. Finally, click the bell button. Thank you for listening us. Bye bye.